Yo, what up traders? Welcome to a new educational video. We're going to be talking about relative strength analysis today. I'll teach you how to market profile DXY, how to use the bonds, how to pick the right currency future for your exotic pairs, and we'll talk about the 50% rule, which will help you determine where price will go in the future. So let's dive into this educational. All right, so let's get into this relative strength analysis educational. This PDF will be available in my free Discord, guys. So make sure to go in the link in the description to sign up for the free Discord. You will find this PDF if you want to download it. And I will remove my camera so I won't clutter up the screen. So let's go to the next slide. Right, so we got a lot of topics to cover today. First of all, we'll start off with DXY market profile. This is the first thing you want to do because if we're, for example, in a consolidation, we don't really want to trade DXY, and we can go on to the other topics we're actually going to cover. Next, the major trifecta. This is in essence Euro USD, GBP USD, and DXY. Those three are your core components to analyze before you start trading. Then using currency futures for exotics, we're going to be looking at how to pair up different types of currencies to find a nice pair to trade if DXY is unfavorable. And then we'll talk about the 50% rule, which is a relative strength indicator, so to say. And this will actually help you determine if DXY, for example, if you're not very sure where DXY is going to go, you can use this 50% rule to determine a higher probability move, either bullish or bearish. And that's the last thing we'll cover here. So whenever you're doing a relative strength analysis, you want to determine DXY market profile first. And the reason for this is you want to have a clear direction for the majors. And if not, right, then we can switch to exotics. This is the first thing we got to ask ourselves. Now, how do we determine DXY market profile, right? We look at institutional order flow, right? Order flow is very important to know if we're bullish or bearish. We'll look at the market structure to determine our order flow and validate our direction. And next up, this is a confluence tool. This is the bonds. This will be used to validate our bias on DXY and if we should stay patient and sit on our hands before it moves, or we already have a clear bias and bonds will just validate our direction here. Okay, so let's look at examples of institutional order flow. We want to use PD arrays. So for example, bearish arrays being formed and respected. That's one sign that you're in bearish institutional order flow. We can see that happen over here, right? We can see a break of structure. Price forms a failure swing here. So a lower high in this structure of price action, because this is the highest high here. Then we have a lower high here. Price goes through this low, breaking structure. And we can see bearish arrays being formed here, which means bearish fair value gaps, bearish breaker blocks, bearish order blocks, right? And I marked up the fair value gaps here. So you can clearly see price forms that fair value gap, then trades back into it and closes below with a strong bearish candle. A very good sign of bearish institutional order flow. And the same thing down here, right? Now, what validates this order flow even more is we always want to use market maker models, right? So let's say this is buy side of the curve and this is sell side of the curve. We always want to use the buy side of the curve to form new PD arrays on the sell side of the curve. So if we look at this slide over here, we have all these bullish arrays, right? This is all from the buy side of the curve. We find that these areas should be respected if we're bullish, right? So if we're in bearish order flow over here, we can actually see this down close candle here, a bullish order block being violated, right? We trade below it, then price trades back into it and then drops. Here again, bullish fair value gap, price closes below it. You can see this candle here, trades back into it. Then you can see a strong reaction lower. And over here, again, from buy side of the curve, a bullish fair value gap, price trades back into it. We can see a bearish fair value gap form in the same area, right? We always want to use this concept. This is an area of old buying. Once price trades through it, we'll see a new area of selling, which could form a bearish fair value gap. It could form a up close candle, for example, over here, and then close below. We can use that up close candle as a new area for sells. Let's go for a bullish example. Vice versa, right? First of all, we have here, this is an old buy side of the curve, then it goes into sell side. We have a key level here for a smart money reversal, right? We always want to use market maker models again. This is the low. You can see price breaking through over here. We have these down close candles. We can see price trades back into it, respects it and pushes up through it. And Ideally, you also form fair value gaps, right? That's that sponsorship out of that level, which should stay respected, which is the bullish order block. Then again, price trades back into it. This is all signs of bullish order flow. So here another example, right? Bullish order flow. Again, use the PD arrays, right? We can see here we have this should be a bearish order block, right? But once price trades through it, we can actually use it as a support level or higher, which is a bullish breaker over here. Same here. IFEGs, one of my favorite PD arrays to use for a change in order flow. We can see price trades through those fair value gaps here, goes back to discount of the last range it formed, uses the IFEG, just slightly taps it and then pushes away from it. You can even use old highs and rejection blocks, as you can see up here. This here is a old high and rejection block. Price taps into it and then pushes higher. Obviously, these types of entry here, I don't really like because it doesn't go back to discount. But if we're in an expansion phase, it seeks the most recent PD array sometimes and then pushes up higher. Right, so let's look at market structure. Also very good indication of where price is going, right? So using market structure for lower highs and lower lows, purges and revert on swing highs. So if you're in bearish order flow, typically you'll see a purge and revert, which means price runs an old high, for example this one, right? But the candle closure is still below the high and then it pushes down, right? And we close below old lows. That's a stronger indication with market structure that price is going into bearish order flow. So these purges, you really want to pay attention to those. If you can see those happening and then closure below old lows, that's a very good indication that you're going into bearish order flow. Now, price doesn't always close below the old high. It can still close above it and then still close lower. But these signatures over here, if you see those are a higher probability for a shift in market structure. We can see the same thing here, right? We close below with these candles. Price runs back into premium, then drops with a massive candle here. We have a lower low here. We have a lower high up here, right? Again here, lower high formed. Price drops again. We close below the old lows. And again, price runs the high, purge and revert, right? We can see the high run, but we don't close above it. And then we start to close below these lows again here. Here we have a bullish example, right? You can very clearly see the purge and revert and the close above happening, right? We have this short-term low here. Price runs the low, and you always want to attack the high that is attached to the low, right? So this low gets purged, right? Then we close above the low, again, signature of that continuation purge. Then we close above the high that is attached to the low here, right? So this market structure signature is really good to determine what kind of order flow we're currently having. Same thing here. This is a new range formed, right? We push all the way up from here. Price runs below. We actually gap down. This is DXY, obviously. It can gap. And even though we close below, that doesn't always mean it's going to go bearish, right? We're still seeing the bullish order flow and we don't see purges on the highs. That's important to know here. Then price pushes up, we're still closing above, right? We have a smaller range here. Then we purge the low and then we go above this high again. Right guys, now let's talk about bonds. Not many people use bonds in their analysis. However, it could be a great confluence tool. I wouldn't use it as I'm not going to trade, bonds are not in my direction, right? We use it as a confluence tool. We don't want to have analysis paralysis, but I will show you right now how you can effectively use the bonds while trading DXY. Right, so let's talk about bonds, guys. This will be a bearish example. We'll use bonds to solidify market direction. We'll use inverse institutional order flow, and then we synchronize key levels with DXY. Now, if that was a little bit much to hear, let me break that down, right? We use inverse institutional order flow. It basically means the bonds should move in the opposite direction of DXY, and then they are in sync, right? So bonds lower means DXY should go higher, and bonds higher should mean DXY should go lower, right? Ideally, when they are synchronized, you'll see a strong push in one direction. We'll have clear order flow when these two are aligned. Determining a reversal point by lining up the key levels with SMT. This is important. We want to see SMT in these key levels. So for example, we've got this key level over here, right, in premium. So we're expecting price to go lower from here, which means, again, what I just said, right? Lower bonds means DXY should go higher at the same time here. If we form SMT, that's a great smart money reversal tool, right? So let's look at the DXY chart over here. This is the exact same high you just saw on the bonds, right? We hit the key level and then we form that SMT as well. We're in discount of the range. This is important, right? We don't want to disregard premium and discount and just, oh, we have SMT in a fair value gap. That doesn't work like that, right? We want to still use premium and discount and all our basic concepts before we start using these key levels. So at the same point in time here, we'll form SMT on the bonds, and you can see actually DXY reverses. At the exact same time, bonds reverse with SMT in the key level. Now let's look at the bullish example. This is a key level here down in discount, right? We form SMT with the other bonds. At this exact candle, we would like to see DXY change its order flow in line with the bonds, confirming that they're going into buy side of the curve, right? So we're lining up our key levels with SMT. That's important. So if we look at DXY, this is the same area where the bonds reversed, right? And we see we purge the high, right? Think about the market structure we just used. We purge the high and we start to close below these lows down here. And we can actually see price reverses at the exact same time bonds change their direction as well. Now, like I said earlier, you don't want to use this, oh, bonds are not lining up perfectly, right? If they're both in sync, you'll have a very, very high probability institutional order flow direction, which you can use for your future trade setups. All right, let's go over the major trifecta right now. We'll cover what is in the DXY basket and how we actually can use EU, GU, and DXY together. Right, so over here we've got the major trifecta, right? You can already see the schematic down here. We'll go over that in a second. So what is the major trifecta? It includes Euro USD, GBP USD, and DXY. These are strongly woven together, and this is what we'll be using for relative strength. And Euro GBP will be mixed into this because we want to determine if the euro is stronger or the pound. And then we can decide after we have analyzed DXY, right? We just went over how to market profile DXY. If we know which currency is stronger or weaker, we can pair that up with our DXY analysis. So just to be aware, Euro GBP has a bigger influence on GBP USD because the euro is a bigger part of DXY than GBP, right? So we have the DXY basket over here. These are the currencies that are in DXY. So a lot of people think, oh, AUD USD or NZD USD, that's not part of DXY, right? So even though sometimes DXY trades higher, NZD USD could still also trade higher, depending on the relative strength of the New Zealand dollar, right? It's not part of the DXY basket. But if we look at this basket, obviously the biggest part is the euro. It's 57%. So euro is always the strongest correlated asset when we use DXY. And you guys always see me trade Euro USD because that's very closely correlated to DXY. And I only switch to different assets if I have a more favorable relative strength indicator somewhere else. If we look at JPY, for example, this is the second biggest part. It's 13.6%. And then we have the pound with 11.9 and the Canadian dollar. And we even have some Swedish krona in there. Yeah, you wouldn't think that, but it is Swedish krona. And then we have the CHF with the smallest amount, right? The Swiss franc, 3.6%. Now I've got a nice cheat sheet over here, a nice schematic on how to determine what asset you should be trading. So let's start off with the bullish DXY, right? If we have this arrow up here, right? We want to see bullish DXY. If we mix it with Euro GBP going higher, obviously Euro is then stronger than the pound, right? We should see a more consolidating or high resistance Euro USD, right? And pound should be the one that goes down faster, right? Because we have a weak pound in this occasion. Because if you look at the ticker, if Euro GBP goes higher, obviously Euro is the first ticker, which goes higher, then GBP is weaker, then you'll have a weaker GBP USD. So, vice versa, if Euro GBP goes down, right, we have a Euro USD going lower and the pound will be going sideways most likely. We can go over all this, right? But I want you guys just to go into the charts and check this for yourself, right? You'll see a very strong order flow in DXY bearish, for example, and also a very strong order flow, for example, for Euro GBP going higher. Let's just go compare into the charts what Euro USD and what GBP USD looks like. Let me know your thoughts in the comments, right? Did you find something new? Let me know. But lastly, also, if DXY is consolidating, this is where you really shine with relative strength, because now we can actually pick exotic pairs as well. We'll go over that in a bit. But if DXY consolidates and when you see a strong Euro GBP going higher, we'll obviously see Euro USD slightly trading higher, and GBP USD will absolutely tank lower if that happens. That's because Euro GBP has a lot bigger impact on GBP USD, right? And that all has to do with the DXY basket. Now, how do we pick the correct major, right? First, we determine the higher time frame bias for DXY. Next, we'll go over higher time frame analysis on Euro GBP, right? Determine that relative strength. And now we're going to see the difference between GBP USD and Euro USD. So I got an example over here, right? A clean day, a weekly chart actually. We'll determine the order flow. Like I just said in the start of the educational, right? We can see those bearish arrays. And this is just a very clear bearish order flow. And now we analyze Euro GBP, right? We want to know if the Euro is stronger or the pound. So we'll see this bearish order flow over here. We have this purge and revert, which I just explained earlier in the educational, right? With the market structure. So now we have a very clear understanding on Euro USD. So we have a bearish daily candle, while GBP USD has a bullish candle. We'll focus on this singular candle over here, because this is the exact moment Euro GBP starts its bearish order flow in the chart we just saw. So let me just scroll back. We have that candle here, right? And then it starts to drop. And this is, you'll see the difference in market structure over here. So let's go to the pound chart, right? We're down here, and this is the exact moment bearish order flow starts on Euro GBP. Now let me just go back to Euro. Look at this, right? We're over here, slow push up over here, even trading lower here. Then we have this big push up from here all the way up here. And that's where the bearish order flow on Euro GBP really shines. You can definitely see the difference in the strength. And this is just a key component of relative strength analysis. So now we'll go over exotics. This is the part where when DXY is unclear, we can actually pick a relative strength based on weakness, which one is stronger, or even pair up a consolidating asset with a strong asset or a weak asset. So let's dive into exotics. So what exotic should we actually pick? We're going to use this little schematic over here, right? We'll use a strong currency with a weak currency, or either use a strong currency with a consolidating currency, because the strong currency will still outperform these two, right? And vice versa, when a weak currency with a strong currency and a weak currency with a consolidating currency, the weak currency will still outperform the consolidating currency, but in the other direction, right? So for example, strong with weak, we can use weak for strong inversed. So over here, we've got a strong currency chart. This is the pound futures chart. So all the currency futures charts are backed against the dollar. So when you're looking at a pound futures chart, you're basically looking at GBP USD, right? So again, using PD arrays and market profiling to know what side of the curve we're on, we're disrespecting this up close candle. We're forming another PD array on the same area, right? Old selling into new buying. Then we see price moving up from that order block. It forms bullish for value gaps. It does the purge and revert signature, and again forms a bullish order block. So we're still clearly on buy side of the curve here. So what do we want to do? We want to pair up a strong currency, which is the pound here. We want to pair it up with a weak currency, right? So we have JPY futures here, the 6J1 chart. We can clearly see from this candle here, if I go back to the pound, we're starting from this area over here. The same candle is up here, right? We can clearly see sell side of the curve, bearish fair value gaps being formed. We form bearish order blocks, and again, bearish fair value gaps, and we're looking to go for the sell side liquidity. So now we've got a strong and a weak currency. To pair them up together, we'll get GBP JPY, right? Because we just individually analyze those charts. So when we look at GBP JPY, obviously we want to see that go higher, right? Because at this exact candle here, we outlined those candles in the previous one as well. We can clearly see GBP JPY is going bullish from that exact relative strength analysis point of view. This bearish order block being violated, again, we see those down close candles formed inside of it, right? Bullish fair value gaps being formed, and this is just a very strong run up. This is an example of a bullish exotic relative strength analysis. We can do the same, for example, for AUD. Now this one is not in the DXY basket, but we can still use the futures chart to perform our relative strength analysis. This is clearly on buy side of the curve, right? CSDOB formed over here with the smart money reversal. This exact candle here outlined. Bullish fair value gaps formed, purge and revert signatures. And again, a bullish fair value gap. So we're clearly on buy side of the curve. And it is a strong currency. Now we have a consolidating currency. We've got the Canadian dollar over here, 6C, right? We've got this exact candle here, and price is very indecisive here. So we're pairing up a strong currency with a consolidating currency. Again, the strong currency will still outperform the consolidating currency. So now we paired up the Canadian dollar, right? This chart. And then we paired it up with the AUD chart, which is the Australian dollar. So we're basically pairing up AUD CAD. So if we go to AUD CAD, right, the ticker is over here. We can see at the exact moment here where we looked at our order flow, we can see bearish arrays violated, bullish fair value gaps formed, again, bearish array violated, and you can see price goes into buy side of the curve over here. Now let's do an example of a weak currency. Again, pull up the JPY chart, right? You can pick many different futures charts. You don't have to stick with only pound or JPY, for example. You can pair up the JPY pair because it's very weak. We can still look for other strong assets or consolidating assets. You can still find a nice pair to trade with relative strength analysis. So we've got a Swiss franc over here, right? It's very indecisive. It's stuck in a box. We can see from this candle over here. Now let's pair them together, right? You get CHF JPY. JPY weak, while CHF is still consolidating. But because JPY is so weak, you will still see CHF JPY go into buy side of the curve, right? Another great example of relative strength analysis. Now let's talk about the 50% rule. This is a great tool if you're unsure where a certain asset will trade towards. Let's pick DXY, for example. We'll pick all the dollar pairs connected to it and we'll see how many pairs are favored in one direction. So let's see what that looks like. So if you're looking at the 50% rule, we're looking at DXY and we're not sure where it will go. Now we can use all the combinations with that specific currency, and then we determine if the institutional order flow on those pairs are above or below 50% for one direction. An example of this would be picking all the majors like XXX USD, right? So it could be Euro USD, GBP USD. And if more than 50% of these USD pairs are reaching for buy side liquidity, you can assume that DXY will trade towards sell side liquidity. So we'll be looking at all these 7 major pairs here. Even though AUD USD and NZD USD are not considered a major pair, I think it's a minor pair, but they're all with a dollar ticker. So if we look at Euro USD, right, we'll just note down every single pair. Are we reaching for buy side or are we reaching for sell side? All right, so over here, we can see price goes back into this order block with this candle, then price starts to push up, right? So this one is reaching for buy side, so 1 out of 7. Then same candle here, right? We'll pick the same time in the chart every time, hitting a key level here, pushing up, violating bearish arrays, right? Reaching for buy side, 2 out of 7. Again, this one, AUD USD, trading through a bearish fair value gap, pushing up towards buy side liquidity, reaching for buy side, 3 out of 7, right? So we're already close to 50% here. Another one, NZD USD, same occasion, all order blocks being formed here. This is like a nice stack, or it's like a staircase up over here, but we're reaching for buy side. Then here, we have an actual pair that's consolidating, right? So this is over here, and we're going sideways for the next lot. What is it? 1, 2, 3, 4, 5, 6. 6 days of sideways price action. So we're consolidating into buy side. So we can't consider this reaching for buy side, right? So we have 4 out of 7. Again, USD JPY. Now, this goes higher, but remember the ticker is USD JPY, not JPY USD like all the others, right? So USD is the first one in the ticker. So this one is going up, which it means it's reaching for buy side for the dollar, which is not the direction we're looking for, which means it's still 4 out of 7. And then we've got USD CHF, right? Again, USD is the first one in the symbol, which means if this goes to sell side or consolidates, then it's more favorable for lower DXY. So we're 5 out of 7 here. So we can see 5 out of 7, which is 71% of the dollar pairs here. And they are reaching for dollar weakness, right? EU goes up, GU goes up, and then USD CHF going down. right? If we compare the DXY chart, even though it looks choppy, most likely it will deliver sell-side liquidity as per the 50% rule. And again, like I said earlier as well, right? ADU and NZD are not part of DXY, but it can be a great indicator for relative strength. Now, how do we use the 50% rule with exotics? We'll do the exact same thing, but we'll compare, for example, cat pairs together. So we'll look at all these cat pairs here, just like USD, but we're just changing the ticker to cat. Right? Again, we'll start from this candle down here. We're reaching for buy-side liquidity, right? Price pushes up. From here, 1, 2, 3, 4, all these candles are reaching for buy-side, 1 out of 7. Then we'll go to GCAT, right? Pushing up, reaching for buy-side, 2 out of 7. Bullish order flow, right? Again, AUD CAT. Starting from here, we have SMT on the lows, violating a bearish array. We're reaching for buy side. This is the end candle, by the way. Again, here, this is the end candle. We start from here, pushing through the bearish order block here. We're reaching for buy side, 4 out of 7. Then we have the ticker USD CAT. Again, this one was consolidating, right? So consolidation into sell side, 4 out of 7. And then we have CAT JPY. Again, remember, right? CAT is now the first one in the symbol, not the second one. So CAT reaching for buy side here is against that order flow from the previous pairs. And so we're 4 out of 7 here. And then CAT CHF again, also consolidation into buy side, 4 out of 7. And again, just like DXY, we have 4 out of the 7 pairs, 57%. They display CAT weakness, which is slightly higher than 50%. So we can assume Canadian dollar is most likely to be consolidating. Now you can notice on the September 23rd of most of the pairs had a correction for a stronger CAT, which is why consolidation went into expansion for buy side on CXY. So we have a Canadian dollar index instead of a US dollar index, which is the ticker CXY. So if we look at the CXY, so this is for the Canadian dollar, right? So it could be DXY, but this is CXY. And we can see consolidation, right? And then that moment on the 23rd of September, that's where we had that big push up. And you could see in all the other charts, that's where the correction happened for those pairs as well. You can go back into the video a little bit or download the PDF, of course. You can go through all the slides and compare what that looks like. So I hope you enjoyed this relative strength analysis educational video. If you want the PDF, make sure to hit the link in the description to the free Discord. You can download it inside of my free Discord. If you aren't subscribed to my YouTube channel yet, make sure to hit the subscribe button and hit the thumbs up. I appreciate all you guys watching, and I will see you guys next week in the new video.